Okay, I think we're live. Welcome, Dino. Doing a sound check.
Testing, testing.
Okay, I can hear you loud and clear. And if you're watching in the audience, if you can hear us loud and clear, can you just give us a thumbs up? Give us a confirmation. Okay, well, thank you for joining us tonight. Today is Thursday, the 11th of November, 2021. So 11/11. There's a sale going on. There's a sale going on every month, right? 10/10, 11/11,
Right.
12/12. Yeah, so look, I hope everyone is staying safe. And we have, as usual, our very special guest, Dino from Sentiment. I'll pass it over to Dino in a minute. Sentiment, my preferred on-chain and sentiment analysis platform, right? It's a fantastic platform. Love it. Um, and obviously Dino's no stranger to the show. He's on every second Thursday of the month. So welcome, Dino. We may have missed last month because he was in Dubai, or he was on the plane to Dubai.
Yeah.
Yeah, so love to hear hear you share about your trip to Dubai. Okay, so again, mic check. If you guys can hear us loud and clear, give us a thumbs up or let us know you can hear us loud and clear. Okay, please don't forget to share, like, and subscribe. Right? If you're tuning in on Facebook, click on the bell icon and click choose all, so that every time we go live, you're notified. You get a pop up on your mobile phone. If you're here on Facebook, don't forget to follow us. If you're here on Twitch, follow us as well. Right? Tag a friend who might be interested in crypto. Right? We're what 11 months into this bull run, maybe more. And so we've got a lot of new people who have decided to jump onto the crypto bandwagon. So tag them so that they can jump on, learn a thing or two from Dino. Right? Dino's the master at reading tea leaves. He's really good at it. I learn a lot from Dino. So feel free to tag your friends, tag your family. Right? You might be trying to convince mom or dad that Bitcoin's a good investment, which Dino will be talking about tonight. Okay. Now again, feel free to type in any questions as we go through, right? And then we'll go through it, and we'll try to answer as many as we can. Um, so what's happened this week? Let's see. Bitcoin, reached an all-time high of 69,000 something. Ethereum hit an all-time high as well. The last couple of days, Litecoin, quite a laggard, who's been very quiet for the most of this year, has been surging pretty hard. And yeah, so Dino's gonna talk about all that, right? Okay. I'll get to the announcements. Look, if you're tuning in, we actually have a physical crypto class that we're running next weekend, right? So that's from the 19th to the 21st. So if you're interested, please, right, come and check us out. Right? Maybe come for class. Maybe the best investment is to invest in yourself first, right? To figure out what's this crypto thing before you put any money into the market. So go to crypto.equitiestracker.com, or just type class in the comments section if you're interested to come for class. Okay, so the class is next weekend, 19th to the 21st, right? So just type in class in the comment section if you're interested. All right, so without further ado, I'd like to hand it over to Dino to introduce himself, talk a little bit about sentiment, and then we'll get right into it. Oh, also, none of what we talk about tonight is or should be construed as misconstrued as financial advice. None of it is financial advice. We're just two friends, from different continents having a chat about crypto, right? That's what we do. All right, Dino, over to you.
Thanks. Can you still hear me?
Yeah, loud and clear.
All right, cool. Yeah, so like Andrew mentioned, my name is Dino. I'm one of the, I guess you could say, market analyst at Sentiment. So, very brief introduction about Sentiment. We are a market or token intelligence platform. We specialize in additional and alternative data sets for cryptocurrencies. We've been around since early 2017 with the idea that price and volume related data in crypto are not enough to get a general idea of what's going on a daily basis with the market, and it's not a it's not a sole proprietor of information about the behavior of some of the key stakeholders in the market. So over the last 5 years, we've been developing new metrics and indicators to try and visualize the behavior of other stakeholders in the market. This includes the retail sector, the large addresses or whales and their behavior. This includes any sort of information about exchange flows in terms of trying to gauge the potential sell side pressure for a coin, and many other indicators trying to, like I said, contextualize daily market movements. So more information is available on app.sentiment.net. This is our flagship product, our token intelligence platform. We obviously have a few side products, including our API that is used by, digital asset management platforms and large funds and some crypto exchanges. If you really sort of want to do your own quantitative strategies and backtests and models, you can do so with our data. But today we're really going to be looking at some charts that are available on our website. So app.sentiment.net is the website. We provide on-chain data for about 1,200 different cryptocurrencies. As far as I know, we're still the largest or the most comprehensive on-chain data provider on the market. We also provide social data, which is something that we're quite unique by, and is something that a lot of large clients seem to sort of scout us for. So at the moment, we track around 1,500 different crypto-related social media channels, including Telegram groups, crypto subreddits, Twitter accounts, Discord channels, and a variety of other sources of information. And we compiled that data into unique metrics that, according to several backtests that we've done, seem to provide some really nice alpha that isn't really being talked about a lot. And then there are a lot of a few additional sort of sources of information that we have on the website, like info about derivatives, which are getting more and more traction and becoming more and more of an influence in the crypto market, as well as development activity data of a lot of different projects. So like I said, there's quite a lot of data on the site. If you are interested in sort of learning how to utilize it, make sure to check out app.sentiment.net, and also make sure to read the insights that we create on a daily basis. So somebody from the team writes a report every day about a particular topic to kind of give you an idea of how we read the market using all of these metrics. On-chain analysis is a new type of discipline in the crypto community. It's got a little bit of a learning curve, but not all that much. I think if you stick with it for a couple of weeks, maybe a month, you basically get the hang of it pretty quickly. So we'll go over some of the on-chain metrics for Bitcoin today, as well as some of the social data. And yeah, just talk about some more interesting indicators that we've been seeing over the last maybe couple of weeks, as Bitcoin and Ethereum have really been rallying there, Andrew.
Yeah. And look, I just want to add to the audience that look, welcome if you're just joining us. So Sentiment is a fantastic platform, right? And I have to tell you, I use it every day, right? Every single day, just like I use equity tracker, right? But I use Sentiment every day to see what's actually happening on chain. Now, if you're a serious crypto investor and you're actually trying to go in with an educated decision making, right? Obviously, you'd study the fundamentals. You'd look at technical charts, right, for timing, and you would also look at sentiment analysis. You'd also look at on-chain metrics, right? That gives you a much broader and a much more well-rounded approach, right? You're covering it from several angles, and then you make an educated decision on your investments. But obviously, none of what we talk about tonight is investment advice. Okay, Dino?
Yeah, can you hear me still?
Yeah.
All right, let me share my stream, or sorry, share my screen. Okay. Let's see if this works. So let me know if you can see my screen.
Yep, it's up. Looking good.
Yep. Okay, cool. So, like I said, I know usually we have between sort of 45 minutes and an hour, so I'm going to try and give a general overview of where we think Bitcoin is right now, according to several, like I said, different data sets and sources of information. And we're going to start with on-chain data. So, a couple of days ago, I think it's now, let's see, it's 2 days ago, I wrote a weekly report, which I write every week, on what is currently going on with Bitcoin. And it's a very sort of extensive overview of where we think Bitcoin is based on a variety of different indicators. So I'm going to sort of rehash some of the points that I've made in that article, because the general trends have not really changed, even with the slight correction that we've seen over the last couple of days. So let's start with some basic metrics in terms of on-chain data that I like to sort of utilize on a daily basis, and sort of ease us into the sometimes complex topics that is on-chain analysis. So we can start with something as simple as daily active addresses and talk about where we see Bitcoin at the moment. So for those unfamiliar with how on-chain data works or how we collect on-chain data, basically what we do is we run our own node and we collect data directly from the blockchain. Any type of transaction activity, we compile that, our servers collect it on a daily basis. There's no intermediator between us and the blockchain, Bitcoin blockchain, Ethereum blockchain. And so using that data, transactional data, and address activity data, we've developed around 100 different metrics. Some are more complex than others. Some try to zero in on a particular group of addresses or group of holders or stakeholders. Some are more network level metrics. So active addresses is definitely more of a network level metric. What it really does is it shows the total amount of addresses that are interacting with a coin on a daily basis. So what I mean by interacting with, I simply mean addresses that are either sending or receiving a coin on a daily basis. So in general, and actually I'm going to zoom out a bit more just so I can, just so you guys can see it. This is the chart showing daily active addresses for Bitcoin over the last, let's say, year and a half. So essentially we are looking at the total amount of unique addresses, not entities, but just addresses, because one entity can have more than one address. But still, we're looking at the total amount of addresses that are interacting with Bitcoin over the last 18 months. Overall, and this is something that we've harped on quite significantly over the past couple of months, really since the May correction. What we've seen is a very significant, sort of vivid decline in the amount of network activity or network level activity for Bitcoin or on the Bitcoin blockchain after the correction. So to give you some perspective, generally speaking, between the start of, first of all, we have seen sort of a sustainable uptick in the amount of network activity on the Bitcoin blockchain ever since the early March, ever since basically the coronavirus crash, right? Up until the peak of the Bitcoin bull cycle here in April. So, and then, even up until the May correction. So generally speaking, not just for Bitcoin, but speaking for cryptocurrencies in general, what we tend to see that sustained price rallies often go hand in hand with sustainable growth in on-chain activity, and in particular daily active addresses. So daily active addresses essentially are very often used by on-chain analysts as a proxy, an on-chain proxy, for the amount of demand in a particular coin, for the amount of interest in a certain cryptocurrencies. So it makes sense from a behavioral point of view that as long as there is new money or new blood moving into the market, which is sort of visualized by this metric, and as long as there is sort of new people, there are new people that are keeping the rally going, we should, even though there might be slight or sort of short-term, downward volatility, we should be fine in the sort of midterm scenario. So between early January, or actually January 1st, and this point in time here, so right before the May correction, the total amount of time that Bitcoin's daily active addresses have dropped below 1 million have been 6. So there have been only 6 days in the first, essentially, almost 6 months of Bitcoin's 2021 action, that there have been days that Bitcoin's daily active addresses have been below 1 million. So, I mean, I'm using 1 million as sort of a relatively arbitrary psychological milestone, but I think it gives a sort of a good idea to just tell you where we are or where we've been after the correction. Because as you can see very clearly, after the correction, we have sort of experienced a 20 to 30% loss in daily network activity for Bitcoin, telling us that a lot of the market got spooked. There has been a massive reduction in daily value transfer on the Bitcoin blockchain, which then, from a fundamental point of view, means that there's less of a justification for a sustainable price rally. And this is where we've been for really a couple of months. Between early, sort of late May all the way to early August, late July. And then as Bitcoin started to recover, so did the daily active addresses. And really, we have seen, and I'm going to zoom in a bit now just to kind of give you a better idea. We have seen a sustained uptick once again in daily network activity, even though we are yet to sort of begin mirroring levels that we have seen in the first 6 months of Bitcoin's price action. I think we are still, and it's fair to say that we are still moving in the right direction. So I wrote about the fact that right here, as Bitcoin sort of hit this new all-time high, and I'll zoom in so I can show you exactly how active the network was at the moment. We have hit 1.17 million daily active addresses. So like I said, these sort of numbers are relatively arbitrary. I think usually what I like to look more than the numbers itself are the trends. But 1.17 million daily active addresses is the highest amount of daily network activity since the May correction, suggesting that there is in fact once again sort of a reanimation of the Bitcoin network and quite a lot of interest in the top cryptocurrency over the past couple of weeks. So from a sort of network level standpoint, from a bird's eye view, I think that even though we are currently experiencing a slight correction, the fact that Bitcoin is able to show signs of strength and signs of renewed and continuously growing interest in its on-chain activity and in its token, I think is a good sign. Obviously, this is sort of a current situation. It can change on a dime if we see a sort of a more strong move to the downside. But what I would say in terms of using this metric is keeping an eye on what happens over the next, I would say, 7 days or so. So if we see Bitcoin able to maintain these levels of network activity, I think that would be a fairly strong indicator that we are still in sort of the bull sort of level or bull segment of the market. If, on the other hand, we see Bitcoin's daily and on-chain general sort of network level activity start to decline once again, especially if the price continues to move upwards, that would sort of point or signal a bearish divergence. So generally speaking, when a price moves into one direction, especially upwards, but the on-chain activity starts to decline, that points to the fact that from a fundamental point of view, there's not enough value transfer on a daily basis to justify this rise in its market cap and market valuation. So that sort of increases the risk of short-term price correction, right? So this is one sort of metric that I like to sort of start every now and again, just giving you a glimpse into daily on-chain activity for BTC. And it's not the only metric that sort of visualize network level what's been happening with the top cryptocurrency. Another metric that I like to use to sort of give you that sense is we go down here to network activity and we click on 1 day circulation. So circulation is the metric that tracks the total amount of unique Bitcoin that are moving on the blockchain, or units of Bitcoin that are moving on the blockchain. So essentially, if daily active addresses show the total amount of addresses or wallets that are interacting with BTC, circulation shows the total amount of actual Bitcoin, unique Bitcoin, that are being moved on the blockchain. And similar to its daily active addresses, and I can actually plot both metrics for you to see, over the past through sort of 2.5 months, we have seen a stable growth in total network circulation, daily network circulation, or the total amount of unique Bitcoin that are being moved on the Bitcoin blockchain on a daily basis. So generally speaking, there's a metric some of you may know called the Nvt ratio, which essentially what it tries to do is it tries to mimic the price to earnings ratio only in cryptocurrencies. So the way it works is you take the market cap of a coin or market valuation, and then you divide it by the daily circulation of that coin. So for instance, in the case of Bitcoin, if the market value or market cap is too high relative to daily token circulation, that would mean that relative to its market valuation, there's not a whole lot of value being accrued, created, and transferred on the blockchain on a daily basis, and as such, it would sort of be a bearish signal. However, if the market cap is low or relatively low to the amount of daily on-chain activity, that would be a bullish divergence. So currently, we have this NVT model that we've been sort of showing on our weekly streams every Friday at 4 p.m. Central Eastern Time on our YouTube channel. Our NVT model currently is still flashing green, meaning that compared to Bitcoin's market cap and market valuation, its circulation is growing, or sort of it's showing signs of strength. So like I said, obviously there's no guarantee, but I think for the time being, at least, we are at the very least seeing the trends that we want to see in Bitcoin's network level activity. This is not the only thing that is going to drive the market, but there is signs of new blood and reanimation of the Bitcoin network that we want to see, right? So something to keep an eye on. So yeah, I'm gonna now move into a specific group of Bitcoin addresses that a lot of people like to talk about. And usually when we post anything about large addresses in particular on our Twitter account or on our Discord, this is the type of content that gets the most engagement. So obviously, outside of network level metrics, there are some addresses that have more sway on the market or more influence on the market than others. Makes sense, right? So for Bitcoin, those would be large addresses. And for me personally, anything above 100 Bitcoin, so any address that holds more than 100 Bitcoin is typically for me considered a large address and what in the crypto community is colloquially known as a whale. So we have these metrics. Let me first unmerge it for you so I can show you the metric first. So we have these metrics that we call supply distribution that essentially track the total amount of Bitcoin that is held by different groups of addresses. For instance, I can click on this group here and it will show me the total amount of Bitcoin that is held by addresses holding between 1 and 10 BTC. So we can see that currently they hold 8.94 or 93% of Bitcoin's total circulating supply. We can also see how much that is in absolute numbers. That is about 1.68 million BTC that is held by addresses holding between 1 and 10 BTC. So then what we like to do is we like to look at what is the behavior, or what are the patterns of behavior of large Bitcoin addresses in particular, because typically speaking, they seem to have a disproportionate impact sometimes on the market behavior. And this is where we are seeing a little bit more of a yellow flag compared to what I just showed in terms of network level activity. So I'm going to merge these two groups together. So addresses holding between 100 and 1,000 Bitcoin and addresses holding between 1,000 and 10,000 Bitcoin. And we are going to see what is the total amount of BTC that is held by these addresses over the last, let's say, month and a half. So currently, it seems like they hold 48.94% of Bitcoin's total circulating supply. So that's almost half of all Bitcoin that is being held by these groups of addresses. And we can see how much that is in terms of total numbers. That is 9.23 million BTC, right? So generally speaking, it's a massive amount of Bitcoin that is being held by these large or whale addresses. And in particular, what we see as a slightly concerning signal is that despite this recovery in Bitcoin's price action, and despite Bitcoin sort of trend and the potential to break, 70K. Let me just take a little bit of water. We are, on the other hand, seeing a decline in Bitcoin's whale addresses for the time being, at least. So this is a slightly bearish divergence that we're currently seeing on Bitcoin's charts. And it's not, I think, for now, a cause for great concern, but it is a sign of a potential lack of confidence by some large BTC addresses. And this is something that, if you look at the last year and a half of data, what we're seeing is that there has been a massive accumulation trend by these addresses between essentially early May or late April, to the April and May of 2021. So this coincides or sort of goes hand in hand or supports the narrative that it was mostly institutional interest that has been sort of rallying Bitcoin over the last last couple of months of 2020 and first couple of months of 2021. So we see in on-chain data that happening. We see redistribution of Bitcoin away from smaller addresses and into these massive hands. And so after the all-time high, we have seen a general decline in the total holdings of Bitcoin in these addresses. And then, along that way, we started to see Bitcoin correct quite significantly. And then since then, the trend has largely been upwards. So the fact that, and it coincided with Bitcoin's recovery. So the fact that at the moment, this is around 60,000 Bitcoin that is being offloaded by these addresses in about 7 days' time, not a great sign. So 60,000 Bitcoin at current prices, that comes out to about $4 billion that is being shed away by these addresses in a week's time. Assuming that at least some of that money has moved to exchanges and has sort of being transformed into sell-side pressure, that obviously could impact Bitcoin's price action in the short term. And I think this might be part of the reason, at least, why Bitcoin's corrected over the last 24 hours. So let me zoom in a bit and talk and give one caveat to what we're seeing here. So as you're seeing, the total amount of Bitcoin held by these addresses is declining. So the question there that is, where is this Bitcoin going? Is it going to smaller addresses or is it going to even larger addresses? So really, it seems like the group of addresses that is gaining most Bitcoin from this downfall are even larger addresses. So addresses holding between 10,000 and 100,000 BTC. So then you might say, well, that might mean that, or that probably means that it's just larger whales buying from smaller whales, or smaller whales becoming even larger whales. The problem with that is that there are not many addresses that hold 10,000 Bitcoin or above. In fact, there are only 84 addresses holding that amount of money. And those addresses are predominantly or disproportionately dominated by centralized exchange wallets. So it's more likely that we are seeing addresses, or sort of these 100 to 10,000 range addresses, deploying some of their funds to large centralized exchange wallets, which is sort of the thing that concerns me as a sign of potentially increased sell-side pressure. So as a result, I am not fully surprised about the fact that Bitcoin's price action has sort of struggled to break 70K for the time being. I would personally much rather like to see this group of addresses start to accumulate once again. It just has not been happening. In fact, they were sort of flat for a while there, and then after this sort of all-time high correction, they seem to have lost some faith. It's still a massive amount of BTC they hold. And it's not, we have seen these sort of 60,000 Bitcoin, even 100,000 Bitcoin drops previously. They don't always sort of coincide with the end of the bull market or whatever. They sometimes just, coincide with short-term local corrections. So even though network level, I think addresses are showing signs of strength, particular groups of addresses, which might have a disproportionate impact on the market, are showing a little bit less confidence, at least based on on-chain data alone. Okay, so this is from an address point of view, what we've been seeing with Bitcoin lately. So now I think I want to move into a few additional metrics from an on-chain perspective to sort of give you a sense of where we are on the market. And then we can talk a little bit about our social data, which I think is actually super interesting and sort of gives you an idea of where the crowd interest and sentiment is about Bitcoin at this point in time. So there's a few more metrics that I'm going to touch on as far as Bitcoin's on-chain data is concerned that I think can be valuable in gauging which part of the cycle we are right now. And let's start with one of the probably most popular metrics that a lot of people use as far as on-chain data is concerned, which is the Mvrv ratio. So for people that are not familiar with this metric, it's not as complicated as it might sound. So Mvrv ratio is an on-chain metric that tries to visualize the average profit or the average loss of a certain group of addresses. So the 30-day Mvrv ratio visualizes the average profits or loss of all addresses that have acquired Bitcoin, in this case, in the past 30 days. Currently, the 30-day Mvrv ratio is 2.87%. That means that on average, addresses that have acquired BTC in the previous 30 days are up plus 2.8% on their initial investment, right? So this metric does make some assumptions. But generally, it's a pretty decent gauge of what are the current profit margins or loss margins of a certain group of addresses. And then as a result, it lets us know how likely these addresses are to start claiming some of these profits. So as a rule of thumb, the higher the Mvrv ratio is, and I'll show maybe the last 3 years of data, the higher the Mvrv ratio is, the more likely it becomes that holders are going to start claiming some of these profits because they're moving more into a sort of risk-off behavior. They are, generally speaking, historically, they're attuned to certain profit margins where they say, all right, I think I'm going to take my money and go away off the market a little bit. And then the lower the Mvrv, so the higher the Mvrv ratio gets, the more risky it can be sometimes to enter into a trade because you're playing against a lot of unclaimed profits. And so the lower the Mvrv ratio gets, the more opportune time sometimes it can be to accumulate a particular cryptocurrency. So obviously, I mean, this is just one indicator, so you shouldn't use it as a silver bullet or anything, but this is the way that people generally look at the Mvrv ratio. So with that being said, usually you want to look into historical trends for Mvrv to sort of gain a sense of where are those highs and lows of Mvrv, sort of historical danger zones and potential opportunity zones for, in this case, Bitcoin. So generally speaking, I usually talk about the fact that historically, it seems like Bitcoin has expressed a tendency in terms of its 30-day Mvrv ratio, expressed a tendency to peak between, and I'll draw a few lines here, between 15% and 20%. So this generally seems to be a danger zone for Bitcoin's 30-day Mvrv ratio. Now, obviously, there are a few outliers, but usually they don't last more than a couple of days. And in general, they point to massively overvalued market conditions and sort of unsustainable levels of Mvrv, which might have to lead to a short-term price normalization, as you see each time that we even break through these levels. Extremely high profits by a specific group of addresses that might, start claiming these. So generally speaking, anything between 15 and 30% and 20% seems to be a margin or sort of profit level at which short-term Bitcoin holders like to reduce their exposure in the market. So as you can see, we have reached that level both in August around this local top, and then at Bitcoin's latest all-time high, we have I think we have peaked at around 17 or like 18.1% or something. So we were jab smack in the middle of the danger zone for BTC, which to me also pointed to the fact that we might be a little bit overvalued and there might be a risk of short-term correction. So since this slight correction here, we have sort of normalized in terms of Bitcoin's Mvrv. We have even dropped down to slightly below zero, or went very, very slightly into negative territory. Currently, like I said, we are at about 2.6%, plus 2.6% on Bitcoin's short-term Mvrv. So what that essentially means is that currently, short-term traders, swing traders for Bitcoin, aren't really up by much on average. So the question then that you need to ask yourself is there going to be sort of a market-wide effort to sell when the profit margins for short-term traders are on average 2%? The answer is probably no. So in terms of gauging the potential sell-side pressure, it seems like it's likely that we have some room for price appreciation before Bitcoin's Mvrv ratio reaches those dangerous levels once again. So from a sort of short-term perspective, I think there is case to be made that, at least according to this metric alone, without taking into account anything else, there is more room for further price growth before we once again can deem Bitcoin's MVRV overvalued and as such consider it an increased risk of a price correction. So this is as far as Bitcoin's short-term MVRV is concerned. I also would be remiss not to mention Bitcoin's long-term MVRV, which is looking a little bit more dangerous. So I'll use the last 3 years again. So this is showing us the average profits of all addresses that have been acquired, that have acquired Bitcoin in the previous 365 days. So previous year, basically a bit more longer term Bitcoin holders. As such, the 365-day MVRV ratio is currently at plus 41%. So there's, on average, all addresses that have acquired Bitcoin in the previous, and the assumption is that they bought Bitcoin in the previous 365 days. On average, they are up 41% on their initial investment, or compared to the time that that unit of Bitcoin has moved into their wallet. So that's quite high, right? I mean, yes, we are certainly some ways away from historical MVRV highs, which for 365, the MVRV ratio tend to go to as high as between 100 and 120%. But it's still sort of a rather a large uptick in Bitcoin's 365-day MVRV ratio. In fact, you can see that it's at this point in time still higher than it has been for much of this period or stretch between 2019 and 2020, and then since the May correction all the way up to early to sort of mid October. So generally speaking, there's about plus 40% in average profits for longer term Bitcoin holders. So the question then that you need to ask yourself is, how likely are they to start claiming some of these profits, especially if the market starts going sideways? And I think the risk is slightly higher here than when it comes to short-term holders. But like I said, both in terms of long-term and short-term Bitcoin's MVRV ratio, we are ways away from historical highs, from historical danger zones. We aren't, unfortunately, undervalued in any sense of the way. Like, I would much rather see Bitcoin's MVRV ratio be here, both in terms of its long-term and in terms of its short-term MVRV, right? So if we were really, really low, like between minus 10 and minus 15%, if you believe in Bitcoin's fundamentals in the long term, this might be, or has proven several times at least in the past, might be an opportune time to accumulate some coin. So if Bitcoin, I have seen some people talk about 57K be sort of the next support level. So if Bitcoin hypothetically does drop to 57K, we would probably see Bitcoin's MVRV ratio move back into that range of minus 10, minus 15%. And then, historically, that seems to be a potential bounce back zone for the coin. Currently, we're not there, so we're not undervalued, but there is more room for price appreciation before we reach that massively overvalued zone. So that's sort of just some context as far as what is the potential sell side pressure that can be exerted from different stakeholders, from short-term traders and from long-term Bitcoin traders, all using on-chain data in particular, right? So I think, we're about 35 minutes in. Andrew, if there's anything to add, feel free. Otherwise, I think I'm going to move into a few sort of social metrics and talk about where we are in terms of crowd excitement about Bitcoin and maybe Ethereum as well.
No, sure. Thanks for that, Dino. Hey, so for those of you who are tuning in right now, if you have any questions, you want to find out about any coins or any question, any of the metrics that Dino just talked about. I remember when I first discovered all these on-chain metrics, it was pretty overwhelming, and I felt pretty stupid, right? I had to ask these really stupid questions. But look, no question is stupid. These are really it's a new class of metrics to base some of your investment decisions on, right? So feel free to ask any questions, because no question is dumb, right? These everyone has to start somewhere. So I remember, I mean, I still ask Dino a lot of stupid questions, right? And so it's because it's complex, but
Yeah.
if you think about it, it is probably one of the most transparent asset classes that you can find out there, right? Um, can you do that with stocks? I mean, to a certain extent, but not really. You can actually see this happen real time, right? Because on the sentiment platform, it's actually updated real time as things happen. So yeah, look, feel free to ask any questions, and I'll just take this 2 minutes to let the viewers know that we have a class next weekend. This is probably going to be the only class in 2021, because we've been on lockdown for most of this year, right? We were meant to have this class back in May, but then we went into lockdown, and so we're actually having it now. So only this is your opportunity. Just type in class into the um, the comment section. All right. So Stephen Chen, thanks for Stephen. Thanks for the comment. Stephen says this is very insightful.
Oh,
Fantastic.
good. Good.
Yeah.
Glad to
All
hear.
right. So I'm gonna pass it back to you, Dino.
Okay, thank you. So before actually, I just realized. So I mean, I've been talking about these metrics, but I think a lot of times we get questions about, well, did you backtest any of this? How accurate is this from sort of a quantitative model perspective? So we've actually backtested the Mvrv ratio. I don't want to get into many details, but I can share this with Andrew after the call, and then he can share with the community, or I can actually share in the Telegram group that you guys have. So we've done this analysis about 6 months ago, where we've tried building real-time price models with this Mvrv ratio. And so what we've done, I'll show you here. What we've done is we've tried to create a real-time buy or sell signal based on 30-day Mvrv. So the way that we've done it is we've split entire history of a coin. This is Bitcoin, but we've done it for a lot of different coins. We've split it into 30-day chunks. And then in each 30-day chunk, let's say this is a 30-day chunk. For each 30-day chunk, we take the highest and the lowest Mvrv point. And then we calculate the median values of all those points. And so we get the median Mvrv maxima and median Mvrv minima, and those come to serve as a thresholds for buy and sell signals. So essentially, when Bitcoin's current 30-day Mvrv ratio hits that local maxima, it triggers a sell signal, and when it goes and hits that local minima, it triggers a buy signal. So this is sort of the early results of this initiative, where buy opportunity or buy signals would be triggered with blue, and then red signals point to our sell red bars point to our sell signals. So as you can see, there are some quite interesting patterns or quite interesting points that we were able to catch. It's not perfect by any stretch of the imagination. Like, for example, it did trigger a buy signal here, although you could have waited until further down to acquire. It did, however, also catch some very clear local tops. But this is, like I said, something that we've been working on. And actually, teaser, we are releasing our own index very shortly. There's actually been an announcement on our Discord channel yesterday. It's still not available for public use, but we are releasing an index that will be automatically rebalanced by the Mvrv ratio. So, there are people on the market that like to put their money into DeFi indexes, and then those indexes typically get rebalanced on a monthly basis just by the market cap of different coins that are in that basket of assets. What we want to do is we want to create an index that is powered by crypto native metrics and on-chain data. Right. So instead of just rebalancing your portfolio based on market cap, which is quite sort of primitive and generally I don't think is the most effective way, what we're going to try to do is we're going to try to create different crypto native rebalancing strategies. And the first one that we're launching is rebalancing based on this 30-day Mvrv ratio and based on these sell and buy thresholds. So if you're interested more into that, about hearing about that, check out our Discord channel, discord.net/sentiment. And yeah, you can find out more there. All right, so
that sounds really exciting, Dino.
Yeah, it's very cool. It's something that we've been developing for quite a while. It's actually going to be completely decentralized, in line with what we're trying to do, decentralized market intelligence. So it's going to be quite exciting to see people buy the CENX token, and then by buying the CENX token, you're generally sort of invested into that basket of assets that gets rebalanced by on-chain data, which it doesn't really exist on the market right now. So yeah, we'll see how it goes.
That's awesome.
Yeah. So the sort of last group of metrics that I want to talk about are some off-chain indicators, right? So here I've talked about a few of on-chain metrics, general sort of daily active addresses, token circulation, as well as Mvrv ratio. But like I said, on top of on-chain data, we provide additional sources of information that we believe also provide some alpha, or at least general insights about what's going on with the market. So one metric that we currently have that I think nobody else has on the market is this social data set here. So if you go to the left metric menu, you click on social, you will get this sort of large drop-down menu of different social metrics that we provide. So for those that have missed me talking about it at the beginning of the stream, what we do in terms of social data is we currently track around 1,500 different crypto-related social media channels. We listen in on those conversations. We scrape data from crypto Telegram groups, crypto subreddits, crypto Twitter accounts, other sources of information. Essentially, what we try to do is anywhere that the main topic of discussions are cryptocurrencies, we try to listen in on those conversations, and we scrape that data, and we've based on the data created a bunch of new metrics that show some interesting patterns. So the most basic metric is social volume, and I'll actually show it on something like Matic because it's a bit more clear there. But generally, this is the type of stuff that we often see. So social volume shows the total amount of mentions of a particular coin on crypto social media. So essentially what we do is we track the total amount of, in this case, Matic mentioned, and you can plot it against the price of Matic to sort of see how much the crowd is talking about the coin on a daily basis. Social volume is the most basic metric that we have. We have also created social dominance, which essentially compares the mentions of that coin to the top 50 cryptocurrencies by market cap and the amount of mentions of those coins overall. So basically, it's sort of relative social volume. You're seeing the amount of mentions or sort of the prominence of a coin on crypto social media compared to other popular coins, which is sort of an additional insight into just how much a coin is being talked about. So generally, what we have seen, and you can kind of see it pretty clearly on this chart, what we have seen is that more often than not, when there are massive sort of spikes in social mentions and social dominance, and in general, there's elevated chatter towards a coin, it typically, especially if that coincides with a price uptick or sort of pump of the coin, it typically points to the crowd being becoming a little bit too excited about that particular coin. It points to the crowd or the retail sector of the market becoming hyper aware of the rally, and as such, points to market euphoria or peak market euphoria. As a result, these elevated social metrics are usually not a great sign for the short-term price action of cryptocurrencies. I'm talking here about Matic, but it applies to nearly all coins. We've done some backtests on these metrics as well, and it seems like when there's a massive uptick in social metrics, social volume, social dominance, and a few others that we have, in line with the coin's price appreciation, it seems to coincide with periods of local price tops or local consolidation, and that can last to from a couple of days to a couple of months. So with that in mind, I am very sort of privy to keeping an eye on Bitcoin's social metrics. And let me show the last 3 months, for instance. There we go. So this is a Bitcoin social mentions for the last 3 months. I'll show you the last year as well. So the most chatter has been around Bitcoin's price correction here. So this is something that's a little bit different for Bitcoin than all the other assets, is the fact that when most coins are, the only time that most coins are being talked about in the mainstream crypto community is when they're pumping. Like you saw with Matic, most of those spikes were while Matic was just blowing everyone out of the water in terms of its price gains, right? But with Bitcoin and to some extent Ethereum and maybe a few other cryptocurrencies now like Solana and Polkadot, because they're very hot and trendy, you will also see these massive spikes in mentions while a coin is declining in price action as well. But generally speaking, this is what we've been seeing with Bitcoin's latest price high. We have seen a pretty significant uptick in social mentions. And in fact, we have also seen a pretty significant uptick in the average social sentiment towards Bitcoin. So this is a metric, without going into too much sort of details, that we've developed using the same data set. So we take all of these mentions of Bitcoin and then we put it through a machine learning algorithm, which labels these mentions of Bitcoin as either positive, negative, or ambivalent. And then the end result is a metric like this. We call it weighted social sentiment, but essentially what it shows is the average bias of the crowd, of the crypto social media towards Bitcoin. So the higher this orange bar is, the more bullish on average it seems like Bitcoin's mentions are on a daily basis. And then the lower it is, the more bearish those mentions are. So as you can see, around the previous all-time high, there has been a pretty significant uptick in Bitcoin social sentiment. And this is, by the way, this metric and the 30-day Mvrv ratio are the two reasons why I have sort of reduced my exposure with Bitcoin around 65K. I don't, always catch the top, but I like to brag when I do. These are the two metrics that I've used to sort of convince myself, at least, that we are in a little bit of too overheated conditions, right? So there's a ton of metrics out there that you can use. But for me, it was like, all right, it seems like the crowd is becoming hyper euphoric about Bitcoin. And it also seems like the average profit margins are getting very, very high. So there's increased risk of dumpage, right? So as such, we have seen, whether that's the reason or not, we have seen a sort of a midterm or sort of, short-term consolidation for Bitcoin's price action. And then once again, as we sort of dipped into the negative or bearish sentiment, we have been able to, rise once again. So what I like, what is particularly interesting to me about this latest sort of journey into price discovery for Bitcoin is that its social metrics aren't actually that high. So I'll show you social dominance as well, which maybe even shows it a bit clearer. So this is what social dominance for Bitcoin was at its previous all-time high. So it peaked at around, like 31%. So basically 31% of all mentions of top 50 cryptocurrencies, 31% were about Bitcoin at this point in time. So a massive amount of chatter towards BTC. Currently, though, even with this all-time high push, it has lingered between sort of 15 and 18%, which isn't obviously bad, but it's definitely in a downtrend. And it's quite an interesting sort of development that I think some people may not be aware of, is the fact that there hasn't been a whole lot of hype around this all-time high relative to the previous all-time high. And also, in terms of the average sentiment towards Bitcoin, we are actually still seeing it be relatively normal or neutral, ambivalent, rather than super expressive in either direction, right? So then the question is, what does that mean for Bitcoin's price action? And then generally speaking, I mean, while there are no silver bullets and there are no rules, generally speaking, like I said, elevated social metrics usually, while the price is pumping, is not a great sign for cryptocurrencies, because it means that the crowd is hyper aware that the rally is happening. And also from a behavioral standpoint, that also means that there's going to be less of a buy side pressure moving forward, because everybody that has wanted to get into the rally is already aware of that rally, is already in that rally. So when you see massive spikes in social mentions and social sentiment, that means, okay, everybody knows this is happening. So there's going to be less people, just less potential money moving into that trade moving forward. So there's going to be less of a buy side pressure to propel that price forward. So the fact that we are not seeing elevated social metrics for Bitcoin, at least for the time being, sort of gives me a little bit of confidence, at least, that in the short term there might be some leeway for another price push from a social perspective. So I would expect, if we were to break 70K once again, I would expect these metrics, like both social sentiment and social dominance, to just explode back to like these levels or even higher. But for now, we're just not seeing a whole lot of hype. According to data from about 1,500 cryptocurrency related social media channels, people are kind of okay with this level of Bitcoin's price action. There's not a whole lot of excitement. Generally speaking, we don't like to see excitement about the market or about a particular coin, because when the crowd gets too excited, that's usually when the market starts punishing that euphoria and when whales also start dumping. So as a rule of thumb, at least here at Sentiment, we like to see the coin being sort of under the radar a little bit. Even Bitcoin can be relatively under the radar, at least it's as far as its price action is concerned. So whether this decline in interest towards Bitcoin on social media is because there are other competing market narratives, like Ethereum breaking all-time high, like the metaverse and metaverse coins that have been gaining much attention over the past couple of weeks and months because of Facebook's announcement, there are other competing market narratives that are taking a part of that mind share away from Bitcoin, or whether this decline in social dominance is just because people are generally not that interested in Bitcoin on social media at the moment, or at least they have expected this price action anyway. Whatever the reason is, the hype is missing. So from a historical point of view, I don't think that's a bad thing for BTC. Okay, so that's as far as social data is concerned. And then the last group of metrics that I do need to sort of promote a little bit here and talk about, because they're becoming, I think, more and more important, it's also an off-chain data set. It's derivatives, or sort of information that we collect from derivatives data, or from derivatives trading on high volume exchanges. So generally speaking, we like to look at funding rates for Bitcoin on various high volume exchanges. We currently provide data for BitMEX, Binance, and FTX, and we are integrating other exchanges as we speak. So funding rates, for those that are not familiar, and I'll end with this, for those that are not familiar with this metric, what funding rates are. Funding rate is a fee that is paid by one side of the perpetual contract to another. So this is when people are going long or going short on Bitcoin. So when the funding rate is high, it means that Bitcoin longs are paying Bitcoin shorts. And as a result, the market is bullish on average and becoming increasingly bullish as the funding rate grows. And then the lower the funding rate gets, it means that Bitcoin shorts are paying Bitcoin longs for their positions. And as such, on average, the market, or the derivatives market in particular, is bearish. So as you've seen here, and I can also show what the FTX funding rate looks like, which is quite similar, we have seen an uptick in funding rates for Bitcoin over the past sort of couple of days, but also generally throughout this sort of rally here. So what that means is that on several high volume exchanges, there seems to be an increase in bullish sentiment, or almost a bullish consensus towards Bitcoin, which is to be expected. I think every time that Bitcoin breaks a psychological milestone, there are a lot of people, even smart money sometimes, that is going long on BTC. So while that is to be expected, as you can see, historically speaking, and especially like when I show you the Binance funding rates, historically speaking, these extremely high funding rates have sometimes coincided with sort of local tops for Bitcoin several times in the last year, but also back in 2020 and 2019. Generally speaking, these high funding rates point to, similar to social metrics, right? Increased levels of these metrics point to increased confidence in the coin, just in a different pocket of the market. This is derivative traders in particular. And as such, when a bullish sentiment or a bullish consensus forms, there's a lot of over-leveraged longs, and there's a lot of incentive to dump those over-leveraged longs by dumping, or sort of liquidate those over-leveraged longs by dumping the price. So as a result, the fact that we have seen quite an sort of an uptick in Bitcoin's funding rates over the last couple of days, not great. We're still sort of not back to the sort of extremely high levels that we have seen at the start of the 2021 price rally, but we are moving in that direction. So what that means to me, at least, is that we are seeing people becoming increasingly confident about Bitcoin's short-term or mid-term performance. And as a result, the higher the funding rates get, I think the more risky it is that we are going to see, or sort of the more likely it is that we're going to see some downward volatility. And I think this is also part of the reason why we're seeing this crash, is that some Bitcoin longs are now getting liquidated. So there's one on-chain data set that we are using to sort of gain the same type of insight, but from an on-chain perspective. And I've kept this for the end because it's a little bit more complicated. And it's this metric in particular. So this is, I'll try to explain it. It's probably the most complicated of the metrics that I've talked about, simply because some people may not be aware of this particular they might not be aware of how DeFi or decentralized finance works and what it shows. So this chart is showing the amount of wrapped BTC that is locked in MakerDAO's CDPs. So let me break that down. First of all, MakerDAO is a protocol, a decentralized finance protocol that lives on Ethereum, where you can put money in. You can put Ethereum, you can put a lot of different ERC20 coins, or you can put Bitcoin. You need to wrap and you can put Bitcoin into an ecosystem and get out of it DAI, which is a stable coin, right? So the more, in this case, wrapped BTC is in MakerDAO, the more DAI they are extracting from the MakerDAO system. So over the last really month or so, we have seen a massive rise in the amount of wrapped BTC that is being funneled into the MakerDAO ecosystem. So what this suggests typically, or at least what it suggests to me and a few of my team members, is that a lot of people are putting wrapped Bitcoin into MakerDAO to extract stable coins and then use those stable coins to once again go back and buy more Bitcoin. So this is a standard sort of tactic by a lot of like large addresses and large sort of people that are super confident about Bitcoin. This is a way for you to sort of get double leverage on your BTC. So you take the Bitcoin that you already have, you put it in the MakerDAO system because you just put it there to chill. And then you make it work for you even more by using it as a collateral to extract some more stable coins and then use those stable coins to once again buy more Bitcoin. So when you see these rises in wrapped BTC in MakerDAO and other decentralized protocols, what that seems to suggest is that a lot of people are leveraged long on BTC. So it's the same sort of idea as this chart. It's just using some on-chain data sets instead. But both of these charts point to the fact that the funding rates, or sort of the average sentiment towards Bitcoin, seems to be growing in different pockets of the market. So even though social media mentions are low, there are other more concerning indicators for Bitcoin's short-term price action in terms of people and different stakeholders becoming a little bit too over-leveraged long than what I would like to see. So it seems like there's quite a lot of confidence that Bitcoin is going to break 70K. And then, I've seen people talk about even 100K or whatever. Generally, like I said, at Sentiment, we like it when the crowd doesn't talk about a coin a lot. And in general, there's not a whole lot of confidence from a variety of different perspectives because if the fundamentals are strong and the confidence is low, it allows for the price to grow much more and much more sustainably than it would otherwise. So there are definitely some yellow flags in Bitcoin's both on-chain and off-chain data, but there are some positives as well. So I don't want to sort of, give clear price predictions. I sort of just wanted to provide a general overview of where Bitcoin is at the moment. Like I said, network level metrics, I think, are still looking very strong. The question is whether they're going to be able to maintain their momentum in the next couple of weeks. But for now, we're moving in the right direction. What's a little bit more concerning is the fact that some large addresses seem to be offloading some of their bags, and we are seeing a sort of rising bullish sentiment in both on-chain and off-chain data. So those types of metrics, or sort of those types of events, might impact Bitcoin's price action in a negative way in the short term. But as long as network-wide activity is growing, I think there is a potential for us to keep this rally, keep this rally moving forward, even though there's going to be sort of short-term price volatility. That can all change on a whim, though. So I definitely suggest keeping an eye on these metrics on a daily basis. There's about, like, here you can see in my favorites, there's about 8 or 9 metrics that I check on a daily basis. Some of these don't work for Bitcoin, like active deposits, because that's just not the way that the Bitcoin blockchain works. But in general, these are the metrics that I check on a daily basis, just to get a sense of where are we on the market, in the market on any given day. So check out app.sentiment.net. Create a free account for 2 weeks. If you like it, become a subscriber. And let me know if you need any sort of help or any sort of guidance. I'm always on our Discord channel and happy to talk about our metrics. It's kind of what I do on a daily basis. So yeah, I think, Andrew, that's going to be it for me for this stream. By the way, I think you're muted if you're talking.
Sorry, I was muted, and I was talking a lot. I was saying thank you, Dino, for that. I hope those of you who have tuned in have actually learned something from Dino. We actually have we've got a couple of questions.
Okay.
Dino. So the first question is actually from me, right? That's really cool, that funding rate one that's on the site. But I guess on my version, maybe I only see the BitMEX ones. I don't see the Binance or the FTX.
So it could be that you just haven't updated to the latest version of Sandbase. So what you should just do is you should hard refresh. So I think it depends on the machine, but Control R or Function R or F5 on some laptops, or browser. So when you refresh, you should see all of the metrics here in the derivatives.
Okay, cool. Thanks.
Yeah, because we've added this more recently, like in the last month or so.
That's really cool. And that's now that there's a question here from Stephen Chen. He wants to know, so how would you balance between accumulate for long-term coin appreciation strategy versus short-term trading based on charts and metrics in the current market? Dino?
I mean,
I'll let you go first.
So if I understand the question is like, how would I decide, like, how would I play the market in the short term versus the long term, I guess. So generally speaking, I think a lot of our metrics, and this is not all of them, we do have some very like macro indicators and long-term indicators, but really I think a lot of our indicators are very good for rebalancing your portfolio several times a month. So for like swing traders, a lot of the metrics that I talked about today, I think they are decent for spotting sort of midterm trends, short-term trends, and deciding when to move into a coin, but with the foresight or understanding that you might want to get back into it in the next couple of weeks. So like I said, I have personally offloaded parts of my like Bitcoin bags around this level here. But don't take my word for it, because sometimes like I also bought it, I think at around like 54 or something. I was convinced, like a lot of people were, that I thought that this was going to be a short-term correction, but there were just too much exchange related movement in this part of the market that sort of dumped the price. Generally speaking, though, here, the way, like I said, that I use some of our metrics to confirm my theories about the market is the fact that, like I said, social related metrics were extremely high, both in terms of social sentiment and social volume. The Mvrv ratio for Bitcoin was also approaching these dangerous levels. Funding rates was also pretty high. Like if we were here, let me show you. yeah, this is what you would see. So you would definitely see that we are moving in that sort of upper echelon of Bitcoin's funding rates. So for me, it was a sign that um, in the short term we might see some downward volatility. And then as far as when it comes to, I think first of all, a lot of our metrics are better suited for spotting tops than spotting bottoms. But there are metrics to use to spot bottoms. Like I said, you can use Mvrv. You can also use a lot of our exchange data when a coin is dumping and there's a whole lot of new sell side pressure. We actually don't think that's necessarily a bad thing because it points to weak hand capitulation. And if there's a lot of buy side pressure or people looking to buy the dip, that sort of exchange or related activity or sort of increased sell side pressure can be scooped up very quickly and actually lead to a short term price bounce back. So there's a lot of different ways that you can play the market with our metrics in the short term. In the long term, I think there are a few metrics that I use. So I use general sort of network level metrics like daily active addresses and token circulation to just let me know, okay, from a sort of 6 month, year, 2 year scale, what are the trends? Are we seeing improvements in the total amount of value being transferred and created on this network? Are we seeing improvements in network adoption? Are we seeing network effect taking place, right? So general fundamentals about whether the blockchain that you are considering investing in is seeing growth in terms of network level interest, activity, and general value creation. So like I said, some of the metrics that I talked about today are there. There are other more complicated metrics that I use to sort of spot rebalancing trends in the market. Things like we're not going to get into it, but check out mean dollar invested age. I talk about it in the weekly report here a little bit more. It's a very long-term indicator about where we are in Bitcoin's market cycle. So you can see sort of these large slopes and large increases in price that currently or sort of over the last couple of years have coincided with Bitcoin's bull rallies and beginnings of the bear cycle. This is from a very large perspective a metric that I quite like to look at for like a year to a 2 year trend to see whether we are in an accumulation period or sort of a holding period, dormancy period, which would be these large inclines, or if we are in a redistribution period and sort of value creation period like here and here as well. And luckily, because of this increase in network activity, we have seen Bitcoin's min dollar invested age start to move back down over the last couple of weeks, pointing to the fact that the network is becoming more active, becoming more animated, and as a result, there's more value being created on a daily basis. Generally, I think this is a way that you want to analyze network level activity. Like, is there value being created on the blockchain, even for blockchains like Bitcoin, which is used not just as means of payment but as store of value? You still want to see increased activity, I think, on a daily basis, at least in relative terms. So yeah, that's a bit of a long answer, but it's a very complex question. I suggest starting with a few metrics and then expanding your portfolio as you see fit.
Okay, thanks for that, Dino. So Stephen, I think from my perspective, first things first, come for class next weekend.
There you go.
I'm gonna show the class. Secondly, look, I think every investor is unique and different in terms of their circumstances, their objectives, what they're trying to achieve out of their investments. So, are you trying to invest to protect you against inflation? Or are you trying to invest to make a lot of money to become very wealthy? Or are you trying to invest to maintain or capital preservation, right? But this whole long-term versus short-term thing, it's I mean, I'll just give a fairly short answer in the sense that you can have a long-term portfolio and you can have a short-term portfolio for investing, right? So your short-term one, and you can size it accordingly, right? You might go 60-40, 70-30, 50-50. It depends on your circumstance. But if so your short-term one, you're probably look at it every day, and you kind of just trading, right? Because you might have a short term. You can have several portfolios. You can have a short term. You can have a beer money portfolio, right? Where you just aim to make enough in your trades on where the daily or weekly to go for a beer and buy beer for your friends on a Friday night, right? So it's very customizable. It really depends on the investor's circumstance, their objectives, where they are in life, and what they really want to do. So it can be customized. Come for class. All right.
Yeah,
And I think that's time. Again, Dino, thank you so much for coming on. I appreciate your commitment. For those of you who don't know, it's actually a national holiday over where Dino is, and so we really appreciate you committing to still coming on. Where you should be spending time with your loved ones. So thank you for
happy to
taking
be
time
here.
out to be with us, Dino.
Yeah, happy to
Any
be
last
here as
words?
always. I think generally, yeah, check out the platform. app.sentiment.net is the website. You get a 2-week free trial, and then you can decide whether you like the platform or not. If you are into this type of analysis, we do it every week on our YouTube channel. So every Friday at 4 p.m. Central Eastern Time, go to YouTube and type in Sentiment, subscribe to our channel. You'll get a notification when we go live. The two of us, me and Brian, another person from the Sentiment team, we go live and we analyze what's going on with Bitcoin right now from a bunch of different metrics, some that we talked about today, a lot that we haven't. And then we take audience questions. So any coins that the people in chat would like us to analyze in real time, we do those types of requests, do some impromptu analysis. It's always fun. People ask us a bunch of different alts about a bunch of different alts. We never have time to go over all of them, but it's a good exercise to kind of get a sense of how we value the market and how we value different coins. So if you're interested, tomorrow at 4 p.m. CET, we'll be live again on our YouTube channel. So yeah, see you there, hopefully.
So 4 p.m. CET is plus 7 hours here in Malaysia. All right.
Yeah, so it would be about 2 hours from now. Slightly less, I guess 1 hour and 45 minutes from now.
Yeah. So about 11 p.m. Malaysia, Singapore time.
There you go.
Okay. Well, once again, thank you everyone for staying right to the end, and thank you Dino for taking time out during your day off to come on. So we'll see you in a month's time.
Yeah, see you. And once again, thanks, Andrew, for having me.
All right. Thank you guys. Have a good night and stay safe. Bye bye.
Bye, guys.